Okay, so a lot of you have been asking me, why do I have a can of Spam on my desk? Well, this is limited edition pumpkin spice Spam. So I don't know how many of these are there in the world, but it's got to be, well, it's limited, right? So it's got to be rare. So I just kind of keep it on my desk as sort of a collectible, and it's kind of like a decorational piece too, right? So you're telling me that you don't have a can of Spam on your desk? Come on, get with the times. Hey, what's up you guys? Welcome back. So the big winter blowout sale in the stock market continues, and I hope that you've been using this opportunity to buy the dip instead of selling at a loss like a paper-handed sissy. Now I've been hearing for months from people that are like, hey, the stock market is so high right now that I don't want to buy anymore because stocks are so expensive. Well, now's your chance to buy low, right? So today we're going to go through 3 stocks that I'm personally buying in this recent stock market correction. And keep in mind that I'm not a financial advisor, so this is not financial advice. This is just for educational purposes only. I'm just going to point you in the same direction that I'm going, but please do your own research and don't just listen to some random guy on YouTube for your financial advice, right? So with that being said though, let's jump in. Okay, so I'm just going to jump straight into it. So the first stock that I bought is, of course, Tesla. Yes, this will not come as a shock to any of you who have been watching this channel for a long time. Tesla stock has dipped over 30% from its peak, so of course I could not resist. At some point, someone paid $900 per share for Tesla, which kudos to you if you were that person, but you guys know I'm one of the biggest Tesla bulls out there, but even me with like Tesla at $900 per share, I'm like, hey guys, I don't know about that, right? So however, it has now fallen below $600 per share, which I think is much more reasonable. Now, I did buy 5 shares when it was still in the 600-ish range, so I missed out on the dip a little bit, but you can never time these things perfectly. So I'm just happy that I finally increased my position to 50 shares, and it is, of course, my biggest position in my portfolio, and one that I will continue to hold. So, if you've been paying any attention to Tesla news recently, you would know that every single aspect of the company is advancing at a breakneck pace. So if you look at everything from battery technology to autonomous driving to just price to performance in general, no one else even comes close, okay? So I know that the valuation of Tesla still might turn a lot of people off, but the way I look at it is Tesla is around a $500 billion market cap right now. So is there a scenario where I can see that Tesla does not hit $1 trillion in market cap in 5 years? And to me, that's very unlikely actually to see that Tesla not hitting that $1 trillion mark in 5 years plus. You know, you're looking at about a 2x upside at least in the next 5 years, which would still like make you beat the general market, right? Because I think the general market doubles like every like 7 to 8 years or something like that. So, you know, investing in Tesla, I think that is still, even at today's current level, is still relatively safe because Tesla is becoming a much more mature company now. They got the $25,000 Model 2 or Model A or whatever they're going to call it. They got the cheap, like compact Tesla coming soon. So I think that once that comes out, that's going to be an absolute game changer. So I think that what's preventing massive adoption right now of electric vehicles is that, or just of Teslas in general, Teslas are still a little bit more expensive compared to your typical like gas car, right? Think of your typical Toyota Corolla or something. So I think that once Tesla has a car though that has the same price tag as a Toyota Corolla, it literally won't even be a fair choice, right? Like it won't be a fair fight. So what I'm saying is that it wouldn't make sense for you to choose a gas car at that point if the price was the same. So this reminds me a lot of when Apple first came out with the iPhone. So one of the biggest initial criticism was that it was too expensive. You know, people stuck to their BlackBerry, right? People who are saying that would be like, what's wrong with my BlackBerry? There's nothing wrong with it. I'm just going to stick to my BlackBerry instead of going to the iPhone. And then you had some people realize how much better the iPhone was, and they were willing to cough up the extra price tag to buy the iPhone. And then eventually iPhone started matching the price of BlackBerry. And then that's when the masses realized like, oh my gosh, why am I sticking with my BlackBerry? I'm just going to switch to the iPhone because now the price is the same and the software is a lot better. And you know the rest of the history. BlackBerry started losing market share at a crazy pace. So despite Tesla having run up a lot, I still think that it's still on the cusp of that wave. that they're going to hit once the cheap Tesla comes out. So anyways, that's Tesla. Now, moving on to stock number 2. Stock number 2 is MicroStrategy, ticker symbol MSTR. Now, obviously, I bought this stock because of Bitcoin, so I think at this point, like 95% of the people in this stock are in it because of Bitcoin. So in case you're not aware, the CEO of MicroStrategy, Michael Saylor, is one of the biggest Bitcoin bulls out there, and if you haven't listened to him speak, I highly recommend you listen to his talks where he talks about Bitcoin. And at this point, MicroStrategy is no longer a software company. So I don't think that people really care about their software anymore. The company is really just like a Bitcoin hedge fund at this point. So MicroStrategy now owns about 91,000 Bitcoin, which is worth about $4.7 billion. And keep in mind that the company is only worth $6 billion in market cap. So the vast majority of this company's value is in Bitcoin. And they have also issued a lot of debt to buy Bitcoin as well. So they leveraged the heck out of their balance sheet and just basically went all in on Bitcoin. Now, obviously, this has gathered some criticism by some analysts and by some people on Wall Street calling it irresponsible. But if you truly believe that Bitcoin will hit $500,000 US dollars per coin one day, like I do and like Michael Saylor does, I think Michael Saylor is expecting it to go much further than $500,000 per coin, well, this could turn out to be one of the greatest trades of all time. And as a shareholder, you do get to enjoy those like leverage returns, right? Because you're kind of like borrowing money to invest in Bitcoin, or the company is, and as a shareholder, you're investing in a company that has borrowed a bunch of money to invest in to Bitcoin, so you got that lever effect going. So yeah, anyways, that could be a great way to play the Bitcoin bull run. So that was stock number 2. And for the last stock that I bought during the pullback was IPOE, which is one of Chamath's SPACs, and this one is going to merge with SoFi. So if you guys haven't heard of SoFi, I actually made a video previously when the SPAC deal was first announced, so please go watch that video if you haven't already. But essentially, if you want the TLDR version, it's basically just a financial services company in the United States, and it's kind of meant to be this one-stop shop for every financial service that you can imagine. So they offer loans, they have an investing account, a checking and savings account, insurance, they have a credit card coming out, just every type of financial service, as I said, that you can think of, they pretty much have it. So what I love about SoFi is that because they offer such a complete suite of products, their average revenue per user, or ARPU, would be much higher compared to their other competitors, since if you already have one SoFi product, you're much more likely to use all the other ones. So there's more ways for the company to make money off of you if you do everything with SoFi, right? So yeah, I think that this industry is going to be huge in the future, since more and more people are switching to online banking solutions instead of their brick and mortar solutions like going to an actual branch. So I never go to a branch anymore, by the way. Like, when's the last time you've been to a bank branch, right? So every time I go to the bank branch is for the ATM, and I never even like speak to the teller or anything, right? So that's the only reason why I would ever go to a branch these days, is just to like withdraw cash if I ever need it. And even then, I don't go very often. So I think that physical bank branches are going the way of the dodo. And companies like SoFi are at the forefront of this revolution. And this is what I like to see, right? Companies that are in really high growth markets. When the stock dipped, I just had to buy some more. Now, I had 150 shares from before that I bought when the deal was first announced, and I think that back then I bought it for around a cost basis of $18 or $19. I don't exactly remember, but then it went to like $23. So when it went to $23, I sold out of it. But during this pullback, it was actually able to buy back 150 shares for an average cost of only $15.36. So yeah, I made some money when I sold at 23, but now I get to buy it back at, as I said, $15, right? So I think that I got a really good deal on these shares, and I'm gonna hold these ones for a long time. So actually, I got a bonus fourth one. So I did buy 70 more shares of Palantir as well. So if you saw my last video, I made an entire video talking about Palantir. So I'm not going to repeat myself right now. So yeah, I still have the 190 shares in my Questrade account. and then I have 70 shares in my RBC account now. So that brings my total position to 260 shares. And yeah, like I said, in the last video, I really like the stock. I really like Palantir. So anyways, those are my stock buys for this market crash so far, or market correction. I shouldn't call it a crash, but it hasn't gone that bad yet. So these are my stock buys for the correction so far. And you know, if things get worse, I might continue to average down on some of my positions. But yeah, so far these are my buys. So I'll leave the video here. Be sure to hit the like button if you enjoyed the video and consider subscribing if you like the series. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye bye!